So let's start with that. We understand you are bullish on the Chinese tech sector. Is that a function of price? Do you think regulation's gone completely away? Just talk us through that thinking.
Okay. Good morning, and thank you for having me. I think a couple of things, from a valuation perspective, last year the sector is down around 40%. A lot of the company, if you take away the cash, the investment value, some are trading at even below cash value, and then a lot of them are trading at implied single-digit PE. So offer a pretty attractive valuation. Second, if you look at the regulation front, which is one of the big fears from investor last year, I think we also see sign of stabilization. In fact, if you look at the Central Economic Work Conference 2 months ago, they said they focus on the positive role of the capital. I think regulation-wise, we also see sign of stability, and then on normalization. And lastly, from the macro point of view, U.S. is more on the interest rate tightening cycle, whereas China is more on the loosening one. So I think in that sense, actually will benefit the tech names from here.
Okay, I was wondering if you could elaborate a little bit more on what you meant there by, as far as regulation is concerned, you expect stability. What does that mean exactly?
I think if you look at last year, a lot of the different regulations have been targeting for different subsectors, right? So this year is more waiting for implementations. Yeah. So, and in fact, a few days ago, the NDRC and the other government bodies also reiterate the stance on the healthy development of the platforms. And within that, if you look at the points they mentioned, right, interconnectivity, supporting the SME, provide a fair competition environment. These are basically reiterate what they have put out last year. So I think at least they're not anything incrementally new. And then I think the whole situation is likely to normalize this year.
So no news is good news at this point. Kenneth, I'm just wondering, you mentioned a little bit more about the expectations of Fed tightening, and that's sending global growth stocks lower. How sensitive do you think Chinese tech stocks are to the external financial conditions right now, or is it mostly driven by domestic liquidity?
I think two things. One is you will push a lot of the global investor, right, global long only, that we also see that they are reallocating some of the portfolio from U.S. Back to Asia, which last year the stock have down a lot, right? I think this is one thing. The other is when China pulls more the loosening cycle, it will help for example, the consumer, right? It will help the e-commerce names. Loosen macro environment will also help the advertising sector, which is two of the key drivers for the internet companies. So from fund flow wise, and also from the business driver, it will also be positive for them.
So walk us through what your preferences are right now. If there's a pecking order on the areas of tech that you like, what is it?
I think if you think about in terms of the visibility on growth and also the driver for growth, I think for online game will be the standout will be the most attractive one, because if you look back over the past 2 years, first thing is they are relatively immune to the overall economic cycle. One, you have a good title, good content, the revenue can still be pretty solid, like Harry Potter, League of Legends that issued last year, even like Ginseng Impact 2 years ago, also saw very strong performance. So relatively immune to the overall economic cycle. The other is that you have a near-term catalyst coming from the resumption on the Banhao monetization approval. This also be a catalyst for the sector. And lastly, from the medium-term point of view, there is also an opportunity for if you pay attention to Epic and Apple lawsuit in the U.S. by opening up the channel, payment channel for the online games, this also be a significant margin accretive to the online game companies. So that's why we like online game sector the most. On the flip side, entertainment is likely to see more challenge, heavier content investment, intense competition, slower growth from the user and revenue fronts. I think will put pressure on both the revenue growth as well as margin.
From online gaming, let's go to on-table gaming. You cover Macau casinos. I know you're bullish. Tell us why and what the biggest risk is to that outlook of yours and your assumptions, because we're already up, 13% just this week alone.
last 2 years are the perfect storm for the online gamings. But I think if you look at a couple of things, first, investor position is already light, expectation is quite low. Second, regulation-wise, we have the gaming law that actually clear a lot of regulatory uncertainty and provide a certain level of earning visibility, at least from the gaming license 10 plus 3. So you give like a visibility on the renewal of gaming license. Gaming tax remain unchanged. So I think that this is the second thing. And a lot of investors believe that, okay, your VIP junket, when it's come down, it actually significantly lower the policy concern as well and drive a more sustainable development of the Macau industry. And then lastly, if you look at from the valuation point of view, we did an analysis, compare this valuation with the replacement cost, i.e. you come in, you build a hotel, and then get the license to get to replicate the casinos. The valuation is actually around like a 40 to 50% lower than the current market price implied. So I think from the valuation-wise, it's actually pretty attractive. So in terms of upside...
Kenneth, just very quickly, on both tech and gambling, I just want to ask you, when you look at your price targets that you currently have right now, do you think markets rally enough to recover all the losses that we saw in 2021, or do we need to wait a little bit more?
For internet, probably we need to wait a little bit more. After all, the regulatory environment have created a different kind of return for these internet companies. For gamings, I would say it pretty much depends on the zero COVID policy in China. So there's 2 years of pent-up demand, both in China and Hong Kong. I do believe that there's actually a chance for them, let's say 2 to 3 years, return to previous peak.